The Successful Investor by William J. O'Neill. Intro. Hey friend, have you ever wondered why some people grow rich from the stock market, while others keep losing money even after years of effort? The truth is, success in investing isn't about luck. It's about discipline. It's about learning from the best. It's about following a strategy that actually works. William J. O'Neill spent decades studying market winners. He cracked the code, and in The Successful Investor, he shares it all. This book is not just about stocks. It's about mindset. It's about avoiding pain and finding peace in the world of money. So sit back, take a deep breath, and let me walk you through this powerful journey. Step by step. Chapter 1: The Right Mindset, the Right Start. Every success story begins with belief. O'Neill says, before you touch your first stock, you need the right mindset. Most people enter the market with hope. But hope isn't a strategy. They listen to TV experts, follow tips from friends, and end up trapped. O'Neill wants you to trust in history, in data, in patterns that repeat. To be a successful investor, you need to believe that you can learn this. Because you can. You just need the right guide and the right start. Chapter 1: Right Thinking, Right Start. Let's begin with something simple. Success starts in your mind. Before you invest a single rupee or dollar, you need to fix your thinking. Because wrong thinking leads to wrong actions. And in the stock market, that can be costly. William O'Neill says most investors lose because they guess. They follow tips. They listen to friends. They act out of fear or greed. But success in the market doesn't come from guessing. It comes from knowledge, from discipline, from right thinking. O'Neill teaches us that the market doesn't care about what you think. It doesn't care about your feelings. It rewards those who follow rules, those who study, those who wait patiently. If you want to become a successful investor, the first thing you need to do is become a different thinker. Don't follow the crowd, because the crowd usually loses. Instead, train your mind. Learn from history. Understand how great stocks behave. O'Neill says it's not about buying cheap. It's about buying strong, buying winners, and staying away from losers no matter how cheap they look. Most people think they can outsmart the market. But that's a trap. You don't need to outsmart it. You need to align with it. You need to follow the right signals. And that requires humility, patience, and emotional strength. This chapter is not about charts or formulas. It's about preparing your mind. It's about becoming the person who can succeed in investing. O'Neill says great investors don't react emotionally. They stay calm. They follow proven strategies. And most importantly, they protect their capital. Because once your capital is gone, the game is over. So in chapter 1, O'Neill is like a mentor holding your hand and telling you, start right, think right, build the right foundation. Because if your foundation is weak, even the best tools won't help. But if your foundation is strong, you'll survive storms, you'll avoid panic, and you'll grow slowly, steadily, powerfully. That's how real wealth is built. Not overnight, but over time, with the right mindset, with the right beginning, with the right heart. Chapter 2: The Power of Charts. Charts tell a story, not of emotions, but of actions. O'Neill teaches you to read charts like a language. Because price and volume always reveal the truth. Forget the news. Forget the noise. Look at what the market is really doing. Learn to spot bases, cup with handle, patterns, breakouts. It may feel strange at first, but with time it becomes your second sight. Charts don't lie, people do. So trust what you see, not what you hear. Chapter 2: The Power of Charts. Friend, there's something magical about a chart. It's not just lines and numbers. It's a living, breathing heartbeat of the market. It tells the truth when everything else lies. William O'Neill says it clearly. Charts are your best friend in the stock market. Because people lie, news channels scream, emotions confuse. But charts, they whisper what's real. They reflect what millions of people are doing with their money. They don't care about headlines. They show you action, pure, raw, honest. You see, most people invest based on stories. But successful investors, they invest based on signals. And those signals, they live in charts. O'Neill doesn't ask you to become a math genius. He doesn't say you need to decode everything. He just says, observe. Watch how stocks behave. Notice the patterns. Notice the volume. Look at the price strength. That's where the edge lies. He introduces us to powerful patterns. Like the cup with handle. It looks simple, but it has decades of proof behind it. First, the stock rises. Then it gently falls, forming the cup. Then it pauses, that's the handle. And when it breaks out of that handle, that's the moment. That's your chance. But most people miss it. Because they're busy with noise. Busy with fear. Busy with what ifs. But you can be different. You can watch. You can listen. You can learn. Another powerful sign. Volume. O'Neill says volume is like the voice of the stock. If a stock breaks out with high volume, that means big players are buying. That means strength, conviction. A real move is coming. But if volume is low, be careful, because that move might be fake. Charts tell you when to buy. And just as importantly, when to stay away. They protect you from hype, from traps, from emotional chaos. They keep you grounded, steady, focused. O'Neill shares real-life examples in this chapter of how charts saved him and made him, how he spotted leaders early and avoided disasters just by watching the signs. And you know what, friend? You can do this too. You don't need to be a Wall Street pro. You just need the willingness to learn, to observe, to trust patterns over panic, to trust behavior over belief. This chapter reminds us of one golden truth. Price is the final judge. Not opinions, not predictions. Price and volume tell the story. Learn that story, speak that language, and slowly, you'll start seeing what others miss. You'll start buying when it's right, and selling when it's wise. You'll move with confidence and peace, because you won't be guessing. You'll be listening to the power of charts. And that can change your life. Chapter 3, The Can Slim Method. This is O'Neill's core system. Each letter stands for something vital. C. Current earnings. A. Annual earnings. N. New product or service. S. Supply and demand. L. Leader or laggard. I. Institutional support. M. Market direction. It's not random. It's proven. It's how most market winners behave before they explode. O'Neill didn't invent these ideas. He discovered them by studying thousands of winning stocks. Can Slim is your filter. Your radar. Your edge. Use it with patience. And you'll never chase the wrong stocks again. Chapter 3, The Can Slim Method. This chapter is the heart of the book. It teaches us a powerful method to pick winning stocks. A method that has changed the lives of many investors. It's called Can Slim. Each letter in Can Slim stands for a rule. A principle that shows you what kind of company becomes a big winner. Let's go through each one slowly and deeply, so you feel every word. And remember it forever. See current quarterly earnings. Start by looking at the company's most recent quarterly profits. Are they growing? Are they rising at least 25% compared to the same quarter last year? Strong earnings mean the company is doing well right now. That's a green signal. Big winning stocks usually have strong recent earnings. So always begin here. A. Annual earnings growth. Now look at the bigger picture. Is the company growing every year? Consistently. A good stock shows strong growth in annual earnings year after year. Preferably 25% or more. This tells you the business is not just lucky in one quarter. It is powerful and steady. And that means potential for long-term success. And new product, new management, or new highs. Winners are not boring. They bring something new to the table. A new product that's changing the market. A new CEO with a fresh vision. Or even a new stock price high showing strength. Look for what's new, because change drives momentum, and momentum drives growth. S. Supply and demand. This is simple. When many people want something and there's less of it, value goes up. Same with stocks. If a stock has fewer shares and more buyers, its price can rise faster. O'Neill says prefer companies with a lower number of outstanding shares. Because when big investors buy, the price jumps higher. Understand this rule of the market. It's powerful. L. Leader or laggard. Would you rather back a champion or a struggler? Always choose leaders. Leaders are the stocks that are already doing well. They are outperforming others. Don't try to rescue losers. Follow strength. O'Neill used relative price strength ratings to find them. Look for stocks with RS above 80 or 90. Let the winners lead you to profit. I. Institutional sponsorship. Big money moves the market. And that big money comes from mutual funds, pension funds, and large institutions. If they are buying a stock, that's a good sign. But don't just follow blindly. Look for smart sponsorship. Few quality institutions steadily increasing their positions. That's a vote of confidence. And that's a hidden edge. Market direction. Even the best stock can fail if the market is falling. That's why you must understand the overall market trend. O'Neill says this is the most important part. You need to be in sync with the market. Use indexes like the Nasdaq or S&P 500. Follow the trend. Because the market lifts all boats or sinks them. Stay aware. Trade with the tide. CanSlim is not magic. It's a system built on logic and real data. And it works if you stay disciplined. It protects you from hype. And guides you to facts. If you follow it with patience and clarity, you're no longer gambling. You are investing like a pro. This chapter shows us the science behind stock picking. And also the art of timing and psychology. Don't rush. Study the CanSlim deeply. Practice it. It's your weapon in the world of investing. It's your path to wealth. Steady, clear, honest. Just like a true friend guiding you on a journey. Chapter 4 Buy right, sit tight. Timing matters. Not just what you buy, but when you buy. O'Neill says don't buy in fear. Don't buy too early. Wait for breakouts. Wait for confirmation. And once you find a true leader, hold it. Let it grow. Don't sell for pennies. When dollars are waiting just around the corner. Be strong. Be still. And trust the process. Chapter 4 Buy right, sit tight. Buying stocks is easy. But buying right, that's an art. And holding on, that's even harder. This chapter is about patience, timing, and trusting your process. Let's understand it like a friend would explain it to you. When you buy a stock, don't just buy it because it's cheap. Buy it because it's strong. Buy it when it is breaking out of a base. That means the stock was sleeping and now it's waking up. It's ready to fly. That's your buy point. Buy right at the breakout. Not before, not after, right at the breakout. But here comes the tough part. Holding it. After you buy, you'll feel nervous. The price will move, sometimes up, sometimes a little down, and your heart will jump. You'll want to sell fast and take quick profit. But O'Neill says sit tight. If you bought a true leader, let it run, let it bloom, let it show its full power. Big money is not made in buying and selling often. It's made in buying right and sitting tight. You're not a trader chasing noise. You are an investor building wealth. Real, long-term wealth. Yes, sometimes stocks go down after breakout. That's why O'Neill gives a rule. If your stock falls 8% below your buy point, sell it. No ego, no regret, just discipline. Protect your capital. But if it doesn't fall and keeps rising, stay in the game, ride the wave. This chapter teaches one beautiful truth. Success doesn't come from action alone. It comes from wise action and calm inaction. Buy when everything aligns, and hold when the world tells you to panic. That's how legends are made. Remember, your job is not to time every small move. Your job is to spot strength. Enter wisely, and then trust your choice. Buy right, sit tight. This is the way, and this is the secret. For every successful investor. Chapter 5 Mastering Market Psychology. The real game isn't in the market. It's in your mind. Fear and greed. They destroy more accounts than any crash ever could. O'Neill warns you'll feel tempted to panic, to chase, to doubt. But your job is to stay calm, to follow your rules, even when the world is screaming the opposite. This isn't easy, but it's worth it, because peace in your mind brings profits in your pocket. Chapter 5 Mastering Market Psychology. Markets don't just move because of numbers. They move because of people. And people are full of emotions. Fear, greed, hope, panic. If you want to be a successful investor, you have to master one thing first. Your own mind. You see, most people lose money in the stock market. Not because they picked the wrong stock, but because they let emotions control their actions. They panic when prices fall. They get greedy when prices rise. They follow the crowd. They ignore the plan. And they break their own rules. William O'Neill says you must be different. You must think rationally when others are emotional. You must follow your system, not your feelings. Because your brain will play tricks on you. It will say, sell it now, you are going to lose. Or, hold it longer, you'll make more. But a wise investor asks, what does the chart say? What does the system say? Not what the heart says. The market is like a mirror. It shows you who you are. If you're patient, it rewards you. If you are impulsive, it punishes you. If you're confident with discipline, you win. But if you doubt yourself, you lose. There will be bad days. There will be losses. You will feel frustrated. But that's part of the journey. Even the best investors go through it. What makes them great is how they respond. They don't panic. They don't blame. They learn. They stay calm. They stick to their rules. Here's what O'Neill teaches us. Always have a plan before you buy. Know your entry. Know your exit. Set your stop loss. And once the plan is made, follow it like a soldier. No shortcuts. No, maybe this time, decisions. Discipline is your greatest weapon. Also, don't listen to the noise. TV, news, tips from friends, they'll confuse you. They'll create fear or greed. But they won't help you win. You need clarity. You need focus. You need your own belief system. Mastering the market is not about being smarter than others. It's about being emotionally stronger. Being consistent. Being humble. Being willing to learn every day. And knowing the market doesn't care about your emotions. But if you understand them, you can master the game. So next time your heart races when a stock moves, pause, breathe, and ask yourself, what would a disciplined investor do? Then do that. That's how you grow. That's how you last. That's how you win. Chapter 6, Spotting the Long-Term Winners. Not every stock is a star, but some shine for years. O'Neill shows how to spot them early. Look for innovation. Look for strong leadership. Look for explosive earnings. True leaders don't just go up. They transform entire industries. When you find one, don't let go too soon. Ride the wave. Grow with it. This is how fortunes are made. Not by trading every day, but by holding the right one for the long run. Chapter 6, Spotting the Long-Term Winners. Some stocks come and go. But a few stocks, they change lives. They grow for years. They make fortunes. They are the long-term winners. And finding them, that's the real art of investing. William O'Neill spent his life studying those winners. And guess what? They leave clues. If you learn to read those clues, you can spot them before they explode. Let's talk about how. First, a winning stock always has strong earnings. Not just once, but quarter after quarter, year after year. Look for big jumps in earnings per share. If a company's profits are growing 50%, 100%, even 200% compared to last year, that's a powerful sign. Big money flows where big growth is happening. Second, look for sales growth. Earnings alone aren't enough. You want to see the company's revenue climbing fast. When both earnings and sales are rising together, that's magic. That's the sign of a business people love. And businesses people love create massive value over time. Third, check for a new product, service, or leadership. Long-term winners usually do something new. Apple had the iPod, then the iPhone. Netflix switched from DVDs to streaming. Tesla redefined electric cars. Something new gives companies a fresh growth engine. So ask, what's this company doing differently? If it's truly innovative, that's a green flag. Fourth, study the chart. Yes, charts matter here too. Big winners break out of bases. They form patterns, then surge above them. These breakouts often happen before the world notices. Look for price and volume working together. If price jumps with strong volume, that means institutional investors are buying. And where the big money goes, growth follows. Fifth, check the return on equity ROE. This tells you how efficiently a company uses its money. O'Neill suggests a ROE of 17% or higher. High ROE means smart management. Smart management means better decisions. And better decisions mean stronger long-term potential. Sixth, pay attention to the company's industry group. Winning stocks usually belong to winning industries. If the entire group is rising, your chances go up. But if your stock is trying to fly while its group is sinking, that's risky. So look at the whole sector, not just one company. And here's something most people ignore. The best stocks often start small. They don't always look huge in the beginning. But they have strong bones. They have explosive potential. So don't overlook the little guys with great numbers. They may be tomorrow's giants. But remember, even long-term winners don't go up forever. They rise in waves. They rest, then run again. So be patient, stay alert, and respect the charts. Know when to hold, and know when to take profits. One more tip O'Neill shares. Study the past winners. Read about them, analyze their charts, learn how they behaved in the early days. Because history doesn't repeat, but it rhymes. And if you understand the rhythm, you'll dance with the winners early. So if you want to build wealth, don't chase random stocks. Study, observe, find the ones with strong earnings, explosive sales, innovation, strong industry, high ROE, smart chart patterns. And when you find that rare gem, buy it, hold it, ride it. That's how legends are made in the market. Chapter 7: When to Sell. This is the hardest part. And the most important. Most people never learn to sell. They hold losers, hoping they'll bounce. They sell winners, fearing they'll fall. O'Neill flips this. Cut your losses early. Let your winners run. Set your sell rules in advance. Follow them without emotion. Don't marry a stock. It doesn't love you back. The market rewards clarity, not attachment. So sell when the chart breaks, not when your heart does. Chapter 7: When to Sell. Selling is just as important as buying. But most investors ignore this. They wait too long, or they sell too early. William O'Neill says, never let a small loss turn into a big disaster. Let's talk about when to sell. 1. Sell if the stock drops 7 to 8% below your purchase price. This is rule number 1. A hard stop loss. If your stock falls 7 to 8% from the price you bought it, sell it immediately. No excuses, no hopes, no prayers. This rule protects your capital. It keeps your loss small and helps you stay emotionally strong. It's not a failure, it's protection. 2. Sell if the stock starts acting weak after a big run. Some stocks go up fast, but then they slow down. Volume dries up, or the price starts moving sideways. That's a red flag. It means momentum is fading. If you see the stock breaking below key moving averages, like the 50-day or 200-day line, you need to watch closely. If the breakdown is sharp and on high volume, that's a good time to exit. Don't fall in love with a stock. It won't love you back. 3. Sell into strength when the stock is rising but shows signs of climax. Yes, sell even when the stock is rising. Sometimes, a stock moves up too fast. Maybe 20 to 30% in a few days. Volume explodes. Everyone is suddenly talking about it. This could be a climax stop. O'Neill says, big moves often end with big excitement. That's when the smart money sells. Quietly, before the crowd realizes. So, don't be greedy. Take your profits when it's time. 4. Sell if the fundamentals change. Let's say the company had great earnings. But now, sales are slowing. Or profit margins are shrinking. Or debt is rising. You can't ignore these red flags. Even a strong chart can't survive weak fundamentals for long. Always stay alert to news, earnings reports, and quarterly numbers. If the story changes, change your decision. 5. Don't average down on a losing position. This is a trap. You buy more as the stock falls. You think, now it's cheaper. But if it's going down, there's usually a reason. O'Neill says, never fight the market. If your first decision was wrong, don't dig a deeper hole. Cut the loss. Walk away. Live to invest another day. 6. Keep a journal. Write down why you bought, why you sold, what you learned. Review your trades. Selling is emotional, so having written rules helps. It keeps your brain cool when the market heats up. In summary, always cut losses at 7 to 8%. Sell when the stock weakens after a strong run. Sell into strength if you sense a climax stop. Watch the fundamentals. If they weaken, sell. Don't average down. Keep records. Learn from mistakes. Successful investing isn't just about picking the right stock. It's about knowing when to get out. Selling right is what separates the pros from the amateurs. Stick to rules. Stay calm, and never let emotions decide your exit. That's the mark of a successful investor. Chapter 8: Avoiding Common Mistakes. We all make mistakes, but smart investors don't repeat them. O'Neill lists the common traps. Buying on tips, averaging down on losers, ignoring the overall market. Every mistake costs time and peace. So learn from them, forgive yourself, and move forward wiser. Mistakes are your best teacher, if you're willing to listen. Chapter 8: Avoiding Common Mistakes. This chapter is a gentle warning, because even good investors can fall. And most of the time, it's not the market that hurts us. It's our own mistakes. Let's talk about them one by one like a friend. 1. Holding on to losers. This is the biggest trap. We buy a stock, it falls, and we keep hoping it will come back. But hope isn't a strategy. William says cut your losses early. If a stock falls 7 to 8% below your buy price, sell it. No questions, no emotions. Just move on. This single rule can save you from big pain. 2. Ignoring the charts. You don't have to be a technical expert. But charts tell a story. They show you where the big money is going. Never ignore the price and volume patterns. When a stock breaks down, it's not random. It's a signal. Listen to it. Respect it. 3. Not doing your homework. Some people buy stocks based on tips. Or because someone on TV said so. But real success, it comes from your own research. Know the company's earnings. Understand its sales and industry. If you don't do your homework, you're gambling, not investing. 4. Buying at the wrong time. Even good stocks can go down. If you buy at the wrong time, you lose. O'Neill says don't chase after stocks that have already gone up a lot. Wait for the right entry point. Usually when a stock breaks out of a base on strong volume. That's the sweet spot. 5. Selling too early. We panic when a stock moves down a little. We get impatient when it moves sideways. And we sell too soon. But big gains come to those who wait. If a stock is healthy, hold it. If it's going up on strong volume, stay with it. Don't let small moves shake you out. 6. Not learning from the past. Every mistake is a lesson. But only if we reflect. O'Neill says keep a journal. Write down why you bought a stock. What happened next. How you felt. What you learned. Over time, you'll grow wiser. And your mistakes will become your best teachers. 7. Getting emotional. The market doesn't care about your feelings. Fear, greed, hope, they all cloud your thinking. So stay calm. Follow your plan. Don't let emotions drive decisions. Discipline beats drama. Every time. 8. Going against the market. Sometimes, the whole market is weak. It's not the time to buy. It's the time to protect. Many investors try to swim upstream. But O'Neill reminds us go with the tide. Respect market trends. Use market indexes and volume as signals. When the market is unhealthy, step aside. 9. Averaging down. It feels smart. The stock is cheaper now, right? But if the fundamentals are broken, averaging down is dangerous. You are investing in weakness, not strength. Never average down on a loser. Cut it, and look for a stronger winner. 10. Being overconfident. One good trade doesn't make you a genius. The market humbles everyone. Stay humble, stay curious, keep learning, and never bet too big on any one idea. Risk is always real. Final thoughts. Mistakes are part of the journey. But if you can avoid the common ones, you'll already be ahead. This chapter is like a mirror. It shows us where we go wrong. So we can become better, smarter, stronger, more successful. Let's walk forward together. One lesson at a time. One trade at a time. With eyes open and heart steady. Because the real investor learns from every step and keeps going, always. Chapter 9. The big picture. You're not just buying stocks. You are buying a better life. Freedom, security, control over your future. O'Neill reminds you the market will test you. It will scare you. It will confuse you. But if you stay focused, follow the plan, and trust your system, you'll succeed. This journey isn't easy, but it's worth every step. Outro. So, my friend, you've just heard the heart of the successful investor. It's not magic. It's method. It's not gambling. It's growth. O'Neill doesn't promise overnight riches. He offers something better, a lifelong skill, a proven path, a chance to win with wisdom. So believe in yourself, study hard, practice with patience, and most of all, don't give up, because the market rewards those who stay in the game, with heart, with discipline, with vision, and that can be you.